Hi everyone, and welcome back to a question and answer session. I received some really great questions this week during my live streams, and I wanted to take a little bit more time to answer some of them. I believe the answer to the question is going to help improve your study of trading. So the question, same trade, two outcomes. Thursday, I went long buying a 3-bar microchannel, and on the next day, I sold a microchannel. Their management was different each time. So the trader scalped in the first instance, but it went much further. On the second day, they thought, okay, well, I better hold it. They scaled and took a loss. So the question is, how do I know whether I'm making the right decisions and I'm just on the wrong end of probability, or I'm managing the trades poorly? This is a great question, and this is to the heart of what it is to be a trader. When we trade, we're trade probability. So we have to make an assessment and we have to follow those rules. Buying a microchannel here, great idea, got a second leg up. It actually went to the top of this trading range. Here, selling a microchannel, I don't have any problem with that. My trading, I took a scalp and it went further. So I did the same thing you did. But on the next day, I didn't suddenly shift to say, well, yesterday I felt like I missed out on profits, so therefore I'm going to change my strategy on this day. No, it's a microchannel, there's a scalp, I'm finished. So I kept the same strategy on both days, but you changed your strategy. Now, let's explain the difference between those two. Why don't I change that strategy? Because part of the work that we need to do as traders is to pick our setups and look at a lot of charts. Microchannels have a lot of variations. So I think it's useful to put together a document, and it's going to involve a lot of screenshots, a lot of markups, and go and find 1, 2, 3, 4, 500 microchannels. Start getting a feeling of big ones, small ones, ones with gaps, one without gaps. Some that just have bull bars, some that have bull and bear bars in it. This has a bear bar at the bottom of it. It seems more common for people to use a computer for back testing, but trading is about pattern recognition, and I'm the one that needs to know the pattern. So by looking at these over and over again, the subconscious starts to work on it and go, okay, how come this one worked and this one failed? How come this one had 2 more legs? How come this one just had a small second leg and failed? So this starts building your expectations for that particular setup. One thing it's worth noting is you were buying low in a trading range. So this had a higher chance of getting up to the top third of this range. So you're essentially buying in the bottom third of this range, hoping to get up the top. However, in this range, you're selling at the midpoint towards the bottom of that range. So it's already gone to where it should go to. And that's what happens in trading ranges. By the time the signal bar appears, you don't want to sell there. So my first point is go through the setups and look at different variations and start to get a feeling of which ones are stronger and weaker. If it forms in this place, it works better than that place. Then once you've done that, you go and get a pen and paper and start marking up hit rates. How often do they get a second leg? If we just think about stop location, this came back to 50%. No problem. This to me is not disappointing. This is expected. If it comes back more than 2/3, okay, this is probably going to fail. This came back to 50%. No problem. Even just writing down that small point about microchannels having a 50% pullback, you can ask a question, so I don't need to buy the high. Maybe I can wait to buy the pullback. That's called a microchannel pullback entry. If you decide to do that strategy, well, sometimes you're going to miss the microchannel. It just takes off and it never comes back. Other times you'll get the breakout, pullback, sell, scalp, you're done. So going through variations and then getting out the pen and paper and running the numbers, looking at 20 to 30, then get yourself a percentage, a hit rate. Even if another trader was to tell you that hit rate, you wouldn't really trust it until you've done an hour or so's work on it, or a week's work, or a month's work, or a year's work. That's how you go deep. The moment a breakout sets up, how often do you get a pullback? I would say more than 2/3 of the time. It's very rare for a breakout here to just keep going and never come back. Breakout, pullback, breakout, pullback, breakout, pullback, breakout, pullback. Most of them break out and pull back. So you could then say, okay, now that I've done the maths on that, how many of those microchannels pull back first insert number. What's another way I can use to enter them? And then while you're doing that, which one's a trend, which one's a counter trend? My next point would be success and failure is not binary. You see, this microchannel worked, but it took 1, 2, 3, 4, 5, or 6 bars to work. This microchannel basically failed, even though you could have got a scalp. It failed in 1, 2, 3, 4, 5 bars. So my question would be, if in 5 bars my trade hasn't finished, should I keep scaling in? And you can get your pen and paper back out and say, actually, I went through 50 microchannels. They either work in 1 to 3 or 2 to 4 bars, 3 to 5 bars. Any microchannel that takes longer than that is about to fail. So now you've got data on success and failure. And this is why it's really important to have only a few setups, because for each setup, you've got to do a lot of work. When someone likes to trade 10 setups, okay, that's like 1,500 hours worth of work. Are you going to stop trading until you do all that research? Probably not. So better just take one setup, do the work on it, trust it, practice it, get good at it, and then you can add more. The mistake that kept me as such a bad trader for so long was that I would focus on a setup for a week, and then it would go good, and then I'd stuff it up and I'd take losses, which is normal in a probability distribution. I would throw my hands up and go, nah, okay, maybe I won't trade microchannels. Instead, I'll trade something else. I'll wait for double bottoms and double tops. And then you do that for a day or a week, and then you give up on that. And you never get depth on anything. And this is how I became very disheartened about trading. So to answer your question, same trade, 2 outcomes. Is probability playing out? That depends on how you manage that trade. Because managing trades poorly doesn't mean avoiding a loss. Managing trades poorly means I've done research, it says I should trade it this way, but in the moment, I decided to do something different. That to me is trading poorly. I know what I should do, and I did that on DAX the other day. I took an entry, and then I didn't like my entry bar, and I should have put my exit above that entry bar. But I didn't, I just hit close. And I said in the live stream, that's a mistake. I know what the rules are. I know what the probability of that trade is. I've done the work on that trade, but I was unable to follow my own rules in that moment. And that's what happens because we're human. So this is a great question. And what you've got to put the work on is, what does it mean to manage a microchannel trade well for you? And that's going to cover, where does the stop go? How many positions do I use? What's my expectation of the number of bars? Also, how deep is the pullback? I think we had 4 or 5 different metrics in there. That'll keep you pretty busy. But by the time you do that study, every time a microchannel sets up, you'll feel good about it. Here's another microchannel. If you bought anywhere up here, you took a loss. Now, I took a loss on this trade. I bought a pullback. I saw 9. I waited for 10. And in the split second it took to move my stop up, I got stopped out somewhere here. But I know if that bar closes below the last 2 bars, if that's a strong sell signal, the chance of my pullback trade goes down. The probability that this is going to have a small second leg goes up. And so I just get out of that trade, wait for the second leg to happen, and then see if I want to go long. Because this is a common outcome. People think this is a breakout, a pullback to go higher. Oh, no, it's still a trading range. That's the top of the trading range. That's a good sell signal. You get out of the way. So being able to get in a trade, take a loss, and not get disheartened in the microchannel setup, I think is a really great approach. I hope that was helpful. Thanks for sending in your question. If anyone else has got questions, I'll do my best to give some recommendations. Thanks very much.